What's going on, Nick? How the heck are you? It's Friday, man.
It's Friday. I can't complain. My camera's pointed a little bit too far up in the up direction, but other than that, we're doing okay over here.
Yeah, the last time, last time we recorded was pretty much the day I started feeling bad, and I actually developed COVID-19.
Yeah.
And so for the last 2 weeks, essentially, it's been over 2 weeks now. Or it has been. I don't know. Who knows?
It's been 2 weeks.
It's been long enough that I can essentially go out. So I'm going to start working again. I've been working the entire time, but it's like I don't know if anybody's experienced it, but like one day I'd feel completely fine. I'd be working at my setup, and then I would wake up 3 hours later on my setup. It was really weird. It is no joke. Take it very seriously. And if you do develop, Nick's wife told me to drink Gatorade. So thank you.
Yeah.
Ivy.
Yes.
Yep. Yeah. So thank you for that.
Oh, yeah. Oh, yeah. Sure. Gatorade seems to help with some of like the brain fogginess that people are feeling and the general like
lethargicism. It almost felt lethargic. I felt like, I'd be talking, and where I would usually have good ideas or points to say, I would just get lost. It was like almost, I don't know what the word is, Alzheimer's. I felt like an Alzheimer's patient.
Yeah.
You know what I mean?
Yeah, that seems to be a really common thing. And I don't want to get off topic and go down the COVID discussion road too much, but that does seem to be a really common thing with people who've got COVID is memory loss and what they're calling brain fog. And
yeah, well, if you just some things that you forget to do, like paying your debt, eventually it will roll up to your manager. Therefore crying. Roll-up debt. It's not. I went back.
Right there, just for the segue.
Just for the segue. I went back and watched our most previous video, which you haven't watched it now. It's an awesome video. You got to go watch that. It's underrated.
And you got to watch the whole thing. Like the first 15 to 20 minutes are fine. They're good. But like it's like around minute 20 in that last video that we get cooking. It turns into probably my favorite video that we've done since the pandemic ended.
I would say
we went back to.
Yeah, I would say that my favorite one before that one was the Ben Feldman.
Mm-hmm. Yeah, I think this is my favorite one since the Ben Feldman. I mean, not that I don't like them all, they're
yeah,
they're all good. Watch them all. Just watch them all.
But let's talk about debt now. I know. Everybody, I don't care how good you are. I don't care if you're Nick Frumpkin. You're probably one of the best salespeople of all time in Final Expense. Yep. You're going to have chargebacks.
Yeah, sure.
You're going to have debt. Let's talk about that.
Yeah, absolutely. Let's talk about debt, baby. Debt. I mean, debt happens to everybody, right? Like if you're on advances, right? If you're not on advances, I guess there is a lower possibility of you having chargeback debt. It's not impossible. We can talk about that also if you want to. But if you're selling final expense, you're probably selling on an advance. And so you are being given essentially a loan from the insurance company saying that, this is the commission for the first usually 9 months of premium that is going to be on the books for the policy that you just sold. And if that policy doesn't stay on the books for 9 months, then they're going to say, hey, we paid you money that you didn't actually earn. Give it back to us.
Yeah.
And that goes in as chargeback debt
or negative. Debt. And to be honest, the carriers don't even say give it back to us immediately. They just say, hey, give us another piece of business almost to wash it out.
Yeah. And depending on the carrier, like some carriers will be like, hey, we can see you've got enough other business on the pipeline. Don't even worry about it. Some carriers will be like, hey, submit new business in 30 days or write us a check. I mean, every carrier deals with it all a little bit differently.
Sure. But if you have one chargeback, it's not like it's the end of the world and you're going under.
No, chargebacks happen. It's going to happen. The best way to get out of a chargeback is just to keep writing business. The worst thing to do is to then start spreading business around to other companies so that you get paid, because they will take your chargeback debt out of your next advance, which means you don't have to write a check, but then your next paycheck will be a little bit smaller. And that's okay if you're continuing to write business. It's not, I mean, it's like chargebacks happen to everybody.
Which is why, and we talked about this in the last video, it's good to only write a few carriers.
Yes.
Because it won't happen. Like, and we're transitioning into what could happen into roll-up debt for the managers and or IMOs, and it's like a ever evolving thing. I really want to talk about it because it's kind of scary when some people don't realize how big that number can get from an IMO level.
Yeah.
The revolving possibility that if all carriers came knocking to the IMO and saying all of your people owe this amount, do you want to take a guess of what that number is for a relatively sized IMO?
Oh, I'm sure it's in the millions.
Yeah.
It's got to be in the millions, because it's every advance that is paid to every single agent that, it's every policy that's been on the books less than 9 months that's been submitted in the last 9 months, right?
Yeah. Yep.
It's got to be huge. You're talking like a reasonably sized agency does what, $1 million a month? I have no idea. I'm making numbers up at this point.
Yeah, I mean, a decent sized agency, I would consider, a decent sized IMO is going to be doing about $1 million a month. Anything.
So you're talking $9 million minimum. Like that's a chunk of change.
My agency at the size that it is has a forever revolving amount that hovers between 80 to 115,000 possible debt.
Yeah,
that could all roll at one time
at any given time.
Right.
Yeah, that's all. I mean, that's not nothing. Right?
No, it's not.
And yeah, man. And so like we started talking about this. God, because part of me wants to get into like talking about stuff that's more agent relatable and like ways that you can end up getting charged back even if you're not on advances, or like, if you write a GI policy, you can get charged back even if it's as earned. And like some companies have chargeback rules that, whether or not you're as earned, they'll still charge you back for multiple months. There's one very popular company that will charge you back 100% of all your commissions, advanced or not, if the policy doesn't stay on the books at least 4 months. But I don't think that that's as relevant, because you just recently were in a situation that you were sharing with me where you got given a chargeback bill of $17,000.
$17,459.
Yeah, $17,459. I have a friend of mine who didn't even necessarily want downline. Like, I have a friend of mine who works with an agency that promotes downlines, but doesn't force downlines on you necessarily. They're just like, yeah, if you want to have downline, we have a system in place. And they had an agent come on board in his area that wanted somebody local to train him. And they just went to my friend and said, hey, listen, we know you're kind of an independent guy, you're doing your own thing, but do you want to take this one guy on to be your agent? And my buddy was like, yeah, sure. I'll take him on. And he took on he had a total of 3 downline agents, because it wasn't what he wanted to do. He's into producing on his own pen, but he had these couple of downline agents, and I may have even shared this story on the show before. But he, one of these guys, I think it's like a parent got sick or something, and he went out and needed a bunch of money in a short period of time. And he wrote a whole bunch of business with Royal Neighbors, who has an e-signature. And he said he was doing all of this business face to face. And it was everybody he'd ever sold in the last couple of years took out a brand new Royal Neighbors policy. and he got advanced about $45,000 or $50,000, and then he terminated his contracts and said, "I'm out." And he walked away with his $45,000 or $50,000. And immediately, because he terminated his contracts, my friend was handed a bill from Royal Neighbors because he canceled all of these policies. He free looked every single one of them, so these people didn't get charged. He figured he wasn't defrauding anybody but the insurance company this way. So he free looked all 100% of these policies, terminated his contract, said, "I'm out." And my friend got handed a chargeback bill of $55,000. So, I mean, it's a real danger. Like, I mean, stuff, you got to be careful, you know? And so we were talking about it. For some reason right now, there seems like there is a large influx of people, larger than normal, of people who seem to be recruiting new agents, sometimes like as their first order of business. And are being told, you know, almost MLM, like, you know, Amway style, you know, go out and, you know, don't worry about selling product, worry about recruiting 10 people and getting them to recruit 10 people.
Yeah.
You know, and building a team this way. And so we kind of wanted to take a minute and talk about that. Like, what's your situation like? So how did you end up with $17,400 and however many dollars of chargeback debt?
Well, let me try to go back here. One bad agent can ruin pretty much a month's worth of overrides at a decently sized agency. And I want to talk about how roll-up debt really starts to happen. Now, I'll tell you about this one specific guy's case, but just work with the numbers on me here, okay? So they tell you go find like 20 people, right? Find 20 people, we get them to do $10,000 each, and you'll have a $200,000 agency. That's like that's the dream. Well,
sure.
I can tell you from running in an agency, not everybody does $10,000 a month. They should,
right?
They should. It's easy enough, but a lot of people are recruited part time. They only write just enough. I guess we're going to go into a lot of how my brain works about final expense. It's almost. I've studied these numbers since I was at my first shop. Okay, let me. I want to go back to many numbers. The largest insurance or the final expense company, who I work for first, who we probably all know at this point, they were doing about $200 million a year in final expense premium. I got to get my calculator for this one because I haven't done this math in a while, but it just makes sense. Do you know how many agents they have?
No idea.
About 6,500.
All right.
Cool. Okay. So take that 200 million, divide it by 6,500 agents. And you know what that number is per agent average?
Again, that is not a thing that I can do in my head.
That's fine. I got it. It's about 30,000. Let's call it 31,000 for math. Okay. 31,000 for math divided by 12 months is $2,583 in annualized premium per month. Right? Divide that by
on average
4 weeks. That is one policy, $645, one policy per week.
So on average, that one insurance company is getting one policy per week per agent on average.
Yes.
And that's keeping in mind that there are some agents that I know of personally who write way more than that.
Yes. But that's the statistics are that. Okay. Right. That's the statistic, and it's a crazy statistic. But here's that number, $650 or one policy, is important. That number, if you take it of an average commission rate at that place, and let's call it 100, right? It's called 100% commission rate, which is fair. That at a 75% advance is going to pay that person $480. $450, right? That is the same amount of money that you can get paid working at McDonald's for 40 hours a week. Okay.
Okay.
It is McDonald's money, except the person has control of their time and they only have to write one policy a week to make that money.
Right.
That's how much money you can make in the insurance business. You can make McDonald's money with one policy.
One app a week.
One app a week. Okay. Now, most people, 80 to 85%, only work just enough to pay the bills. That McDonald's money is not a lot for you, for me, for a lot of people, but it's enough for people that were working at McDonald's to continue to make that same amount of money, but with less time, so they can screw off and do other things. The problem that creates is if one of those policies falls off, it creates a shitstorm.
Right. Because you're only just making enough.
Just making enough. And that's assuming
just
nothing falls off.
Making enough. Right.
That assumes nothing falls off. Well,
right. So the second something falls off, you're now no longer making enough.
Correct. Right? And when you're no longer making enough, you do things that you're not supposed to do.
Mm-hmm.
Okay. You go write grandma that has a different last name. You go write your uncle who has a different last name, and you don't put that they're a family member. And you go do these horrible things. And if you...
Which, by the way, there is nothing wrong with writing your family members as long as you disclose that they're your family members.
And get paid as earned.
Yeah. It's controlled business. Hey, there's companies that'll advance you on controlled business. Just do the right thing. Be honest about what you're doing.
Yes. Now, with that one particular company, it's not as big of a deal. The Rollup debt's not that thing because they just don't get paid until they write another piece of business. Like it kind of washes out, right? But what happens is this one agent, say, writes $3,000 with company A, and $2,000 falls off because they wrote a huge case and something fell off. Well, rent comes due, and this is a part-time agent. They go write that piece of business that should be written with company A to wash it out, and they write it with company B, and they start writing company B. They're like, oh man, I love company B now. The underwriting's much easier. Well, they're only writing the company because they wouldn't get paid here, and they continue to write here.
Which is exactly what you should not be doing.
Which you should not be doing. This is what happens. Now you've got $2,000 of debt over here. 2 months later, a month later, guess what? $1,500 falls off here. Well, rent comes due. Are you going to write it with company A or company B if you're a bad agent?
Of course not at that point.
You're going to write it with company C. You found out that this company's way better. And, the only reason that these two fell off is because something weird happened with the client and they should have charged you back. Blah, blah, blah. It doesn't matter what you say. You now created more debt. Now you have $3,500 in rolling debt. Well, around this time, 3 months, 4 months down the road, this company terminates you. And you're like, well, whatever. I didn't want to write them anyways. And you forget. Now you're on to your fourth company, and you've created $5,000-$6,000 worth of debt between these companies, and you leave. Eventually, the company A will vector you.
What is vectoring? Let's stop there. That's jargon. What does it mean to be vectored?
Vectoring in layman's terms is like credit report for insurance agencies and companies.
Right.
Okay. Go ahead.
Can you get contracted with other companies if you are on a vector list?
It's very tough, but for the most part, no. If you get vectored, it's almost, you have to have a really strong backing to get contracted.
Can you will it affect your regular credit score? Like, will it affect your ability to get a credit card or a mortgage or other kind of home loan?
It can affect it, yes.
So getting vectored is bad.
Very bad.
Would think. Right.
Very bad.
And it's not easy to get a vector cleared. without,
it's actually easier to get a vector cleared than you would think.
So what do you need to do to get a vector cleared?
You need to reach out to Vector One. You'll get all the appropriate stuff from you'll reach out to your insurance company, and essentially you're going to be calling the insurance company. You're going to say, hey, I know that I owe $5,000, but I don't have $5,000. And the carrier at this point is even willing to go, you know what? As long as you can pay us over the course of a year, pay us 20% right now, and then we'll take that other amount. So pay us $1,000. We'll take that other $4,000 and divide it over a 12-month period. If you can pay whatever that amount is over the next 12 months and be consistent, we'll take you off Vector right now. But the moment that you miss a payment, we're putting you back on Vector. That's it.
So it's not actually that big a deal as long as you are attempting to make payments.
Attempting to make payments, but for the most part, there's some super rare cases. You shouldn't be vectored.
Right.
You shouldn't get to the point where you need to call back and beg and say, blah, blah, hey, I want to make a payment plan. It's essentially you're getting caught for all the bad crap that you're finally doing, and Vector is going to keep you accountable. The insurance carriers will actually pull reports. Some insurers will pull a report once a month and say, hey, this person's on a Vector list. Let's cut off their advances because are a problem somewhere else.
I can tell you, actually, I know with certainty that there is one extremely popular company amongst an up-and-coming 3-letter IMO who's all about, putting family first. But this very, very, very popular company will, if they know that you are vectored with another company, not even having debt with them, they will terminate your contract, fully terminate your contract, and not allow you to recontract, as far as I know, ever. I mean, maybe with if you get, again, your IMO being super gung-ho to save your contract, they might let you recontract once you've been unvectored, maybe. But yeah, this particular insurance company won't will terminate you if you're vectored, even if it's with somebody else with debt from a different company.
Yeah, you have to, if you're going to get vectored, and you got to have a really, really, really strong case. I mean, a really strong case to get to be vectored and still able to get contracted. You have to have some serious backing. I mean, the IMO level, there's only a few people that can override that case. The insurance, the people, it has to be the reps of the insurance company, and that has to be signed off by certain people. You gotta write a letter of recommendation. It's bad. It's really bad.
It's bad. It's not a good thing. It's it's not as bad as having the cops called on you, but it's not a good thing.
It's bad enough.
Yeah, it is. It'll make your life very difficult.
Yeah. So that's what vectoring is for those that don't know, and hopefully, if you didn't know what that is, good. Hopefully you're not vectored.
Yeah, right. Yeah, you haven't had to have firsthand experience, but it is something you should be aware of, especially if you're a new agent. We know there's a bunch of new agents that watch this.
Yeah.
So
let's go back. Now we're 5 or 6 months in. You've got about $6,000 worth of rolling debt. Carrier A has vectored you. And now these other carriers are starting to vector you because they're going to follow suit. Well, now this other company that you're writing now just did what Nick said, and now it's your favorite carrier. Well, guess what? They just terminated your contract, and you're going to new carriers, and you're saying, I want to write business with you. I'm a really good agent. Well, they're going to say, no, you're not. You've got $6,000 worth of debt elsewhere. These other carriers have terminated their contracts with you. We're not going to talk to you. Now you leave the insurance business. You're gone, right? I'm Audi 2000. I'm going to go, work at McDonald's.
Yeah.
Again,
I was going to say go sell cars, but yeah, sure.
Yeah, you're out of the business, right?
Yeah.
You just statistically, sat in the 92% that quit in the first 2 years. You're out in 6 months. It happens to a lot of people. Okay. Now, you never pay that business back because you're like, man, that never worked for me anyways. That sucks. Whatever. Well, about a year. It takes about a year the insurance companies will continue to call you and to continue to try to collect that debt. And if you're a good person, you'll pay it. But a lot of those people aren't. What happens is all that debt will roll up. Okay. Because you're in there's a top, there's an IMO level, and then there's managers and sub-managers depending on how large your place is and how MLM they are. Eventually, your business, that debt's going to roll up to the next person. And when that happens, that's called roll-up debt. And that's what happened with me.
Yeah.
This one particular agent who he actually worked for the first company that I worked for. So he had a relationship to me. He reached out to me and he said, hey, here's how much business I'm doing with this company. I would like to take contracts out with you. And I looked and I said, okay, how you getting your business? I did all the checks that I'm supposed to do. And this one person used to work for a bank. And he was in a very small town where everybody worked to the same bank. And he had all of their information. Banking account information, checking account information, social, name, address, all the stuff that you need to do what? Write an insurance policy.
Yeah.
Right? And just like the company you spoke of, it was a different company, but it was a company that was very lax on how they would allow business to be done. You could type in the person's name as an electronic signature and you can get business issue paid. Well, in about a week, he was able to generate about $40,000 worth of business for people that did not want business with that particular company. Well, when all those overrides start hitting, you look at it and you're like, okay, let me look. That's when I noticed that, I shouldn't have gotten $4,500, worth of overrides at one time. Well, I did.
Right.
Right. That's a lot. Right. That's a lot for one person, for one company. So that's when I went and I was like, hey, what's going on? And the red flag was I couldn't get a hold of them. Right. And then I got an override, a couple overrides from another company. Guess what he was starting to do?
Yeah, same thing, right?
Same thing, same people, right? I went to all the carriers. I called all of them, told them to cut off the advances, as earned the guy, shut it off, right? I mitigated as much as I could in the week and a half that the guy got me. Well, there was already roll-up debt from this guy, previously, but it's more. It was in the case of about $35,000 of what I've had to pay back for this one gentleman.
I mean, and let's be really clear here, just in case, not that any of our viewers are going to get ideas, but we don't know who's ultimately going to watch this stuff. This is criminal activity that this guy did. This is super criminally illegal, jail time, lots of jail time, criminal activity, potentially.
The guy's in jail.
Yeah. Like jail time, criminal activity. This is not a little thing. This is a hugely big deal felony type stuff. Don't do this.
Don't do this.
Right.
So that one person, in my agency, we do anywhere between $220,000 to $300,000 a month,
sure,
which is a respectable final expense.
For a small agency, that's a reasonably sized, not mega integrity marketing AmeriLife, that's a good,
right, at an average override rate of 12.5%.
Sure.
Some are 10, some are 15.
Depends on
the downline, right? Yeah. But an average I know my average is 12.5%, right? So you do the math. Let's take 220 and divide it by, multiply it by 12.5, and ends up being X amount of dollars, right? That one person knocks out almost 2 months worth of overrides, which if you grow at a certain point, it's to the point where, if I go in the field, it's almost like a detriment because I'm out of the field and I can't call people. It's whatever.
Right.
But eventually you just, there's a point where you just can't go back in the field. And that was happening with me. I now am, gonna, go make a ton of leads and go write a ton of business to make up the money. I'll do it for 2 months. I'll write $18,000 a month for the next 2 months and be able to just kind of make that income by myself. But it's essentially like, that one person off of a pretty large size, shop can knock out all of your overrides for a month and a half, 2 months. And if you're not, you can't manage your money early. Like when you're a brand new agent, you're told to go recruit. You haven't made enough overrides that if that were to happen to me, when I first started and I didn't have the cash flow that I had today, I would be crippled. I would almost go under. Right. And if you go under as a manager and I leave, guess what happens?
Whoops.
All that business, including any of the other rolling business, guess what? Rolls upwards again and rolls upwards again and rolls upwards again.
And what does it do to your other agents that you had contracted under you if you get like the agents who were not screwing up, but who were also new and getting started and trying to get their feet out underneath of them? Mm-hmm. And then you as their manager, you went out of business.
Yep.
Like it is as dangerous for other new agents who are being recruited in to get recruited by somebody who doesn't know what they're doing and who isn't established, as it is for somebody who doesn't know what they're doing and isn't established to recruit new agents. Like it's dangerous and it's bad for everybody.
Yeah.
Like we should talk for a second about the reason why this whole system exists. And the job of the IMO, the reason why we even have IMOs and NMOs and whatever, and this whole layers upon layers of people, is to protect the insurance company from getting hit with this bad debt, right? This is the reason why we are allowed to get advanced. The reason why it is difficult and almost impossible a lot of times to go direct to an insurance company without being a captive agent is because the insurance companies don't want to take this risk. So they manage the risk by giving the risk to the IMO. That's the IMO's primary job. That's the main reason that an IMO makes an override, is managing the risk of your debt.
And there's nothing wrong with your IMO receiving an override.
No, that's why they do it. I mean, they offer you other services and things also because, they are earning some of that money. And
part of the override
reason to be with them. But
part of the override is to go to support the agents who need help to help them sell business, that they'll get more overrides and support even more. I will tell this: if a insurance company will offer you a direct contract, if you call them and say, hey, I want to sell for your insurance company, will you offer me a direct contract? And they say yes without hesitation. Mm-hmm. Be very careful about that.
Yeah.
Insurance company.
Most of the time, there are some. Let's talk about a good example. There's Midland National, who doesn't allow IMO broker relationships, but they've got a sister company, North American, exact same company, mm-hmm. that exists to be brokered through IMOs. But Midland National will do that, and they'll take you direct. But they're the exception rather than the rule. And most of the time, if you get a direct contract, you're going to get paid less than street.
Yep.
Not necessarily less than what an IMO is going to offer you, because there are many IMOs, and it does seem like, I don't know, it seems like this is getting more common, that more and more of these IMOs are being built on this multi-level marketing platform model. And it used to be that they were the exception rather than the rule. And I think big picture, they still are, but the ones that are multi-level marketing are the ones that make all the noise because they have to, because that's how they make their money, is through recruiting.
Well, let's talk about, yes, you're 100% right. What happened was the internet. Okay. 2000, let's just talk 2000, 2002, 2003, 2005. It's around 2005, maybe 2008. It's essentially when the big crisis hit, right? 2008.
Yeah. Well, 2008, the financial crisis. Yeah, absolutely.
Yeah. So a lot of people were looking from the real estate market, and they were looking into something new. And they stumbled upon this little thing called final expense. And these IMOs had these levels that are still here today. Okay. And they were able to have 20, 25, 30% override on most agents. Back in the day, if you're an agent, a good agent, and you were direct to an IMO, your contract levels would be top 120.
Yeah.
You know, and eventually the internet came about, and agents started learning that there was a higher level. And one guy got it, and he went, if you give me this, I will not tell anybody else. But he did. So he offered 5 points higher than everybody else was, and he was receiving more people. Well, the other places were like, well, we'll give out a little bit more than you are. And then there was this competing thing, and eventually everybody clawed their way up to these higher level contracts that 10 years ago, 15 years ago, people didn't even know existed.
Yeah.
And agents can now walk around with the same IMO contracts that are just personal producers that don't actually have any agents or sub agencies or anything like that, just walking around with IMO level contracts.
Yeah, I mean, I don't think that happens as often as people say that it does. That people, I think the reverse is more often true. That people are getting put on sub street level contracts more often than they are getting put on IMO level contracts. You see a lot of people getting contracted in. I think way more people are getting contracted in on 60%, 50%, 40%, 30% contracts than are getting contracted in at 130, 140, 150. And when I say 130, 140, 150, I actually mean 130% of your first year premium, not, I don't know. There's other ways of, I suppose, calculating 130 that where it doesn't actually add up to 130, it adds up to like 110. I don't understand that math, but yeah.
1 second, I'm ordering Uber Eats for my wife, and I'm having the courier meet my wife. 1 second.
Sure. No problem. We'll pause.
Here, back near the.
Ryan, play us some like really fun like little hold music while Matt does this. Something public domain, but
yeah. 1 second. Hopefully that's done. Yeah, well, okay, so I didn't get to finish, and sorry if I cut off again, but like,
yeah,
what ends up happening is it got to a point where it was so high where people were getting 120s, 130s, right? And then they started recruiting, and eventually what happens is they give out all that they can. If they get a 130, they'll give up to a 125, and they limit their override, right? And then the highest that person can give out is a 120, 115, 110,
right,
105, 100. And then I'm telling you, I've seen 9 layers deep on an agency. Sure. I've seen it.
Sure.
For 5 points.
I mean, yeah. So anyway, to try and stay focused a little bit, it's a bad deal all around. Getting
Yes.
involved in something that is less about training and teaching you to be the best final expense agent you can be, and is more about teaching you how to build a team and get as many people into your team as possible and grow and expand that team. Anytime you're in a situation where the focus is on growing and building the team, and the focus is not on selling and prospecting and putting business on the books, you're in a situation that's not good for all of the reasons that we just talked about. I don't have a team that I work with because of exactly this. Like, I don't want to have final expense downline agents. I don't have any interest in doing any of that. You can make a really, really good living, like a really good living. I make a better living than most of the official marketers who run teams.
Yes.
That I know, because I can sell and I'm in control of my stuff.
Once you learn how to sell, you never, ever, ever have to worry about money ever again. Ever.
Like you got slapped with a $17,000 and change bill, and your response is, okay, well, I guess I'm going to go out and sell a little bit this month. Come up with $17,000. It'll take you 30 days. Not a problem. It's easy.
Yep.
It is.
It is.
Like,
it's that easy. It's, I'll make myself 100 leads.
Yeah.
150 leads. Let's say I'm Rusty.
Yeah.
I'll sell 20 policies.
Yeah.
And I'll make about that amount of money.
Yeah.
And that'll be it.
And then you're done.
Yeah.
Right. And then that's all you need to do.
Yep.
And it's I don't know. It's a thing that is happening right now, and I think a lot of it has to do with COVID, and stuff has just gotten strange in the last. Not that this hasn't always existed, but I just feel like there's been so much more of a push towards these types of models in the last, since about August of 2020. It feels like there's so much more of a push towards these types of models. And it's a dangerous game for everybody. I recommended at one point the TV show on becoming a god in Central Florida. I don't know how great it is as a TV show. I actually didn't finish watching the entire first season. I want to say it's a Showtime show, or it was a Starz show, or it was one of those. Had Kirsten Dunst in it as the lead, but it was about everybody who's in final expense, especially if you think you might be involved in an MLM company, needs to watch the first 3 episodes of this show, because it is so relevant, and it is all about a guy who is selling an MLM product. I mean, and it's not insurance. It's not insurance. He's not an insurance salesman. He's selling like paper towels and stuff. But it's so relevant as to what the dangers and the dark side and the bad side of MLM selling is. And it was so accurate. Like, it was, I cannot tell you how accurate it was as to what this culture and what these things are like.
What's the name of the show one more time?
On Becoming a God in Central Florida.
Is that like a Netflix?
No, it was like Showtime. I think it was either Showtime or Stars, or maybe it was HBO. I don't think it was HBO. I think it was either Showtime or Stars. But it's, and again, I didn't finish watching the whole first season because it kind of ended up going off the rails and turning into something sort of weird towards the end of the first season. But those first 3 episodes, where it's all about this guy, and he's struggling, but he's got these motivational tapes that he's listening to, and he believes in the leader of the company, and it's almost a religious type of fervor as to how much he believes in this company, and he's going out and he's going to make $1 million out of this, and his wife is getting ready to leave him because he's investing every penny he makes back into this MLM scheme, and it just kind of goes off from there, and it's so true. Like it resonated so strongly with me. And I've never even been directly involved in an MLM. I was just in a captive insurance agency when I started off, and it resonated so strongly with me. I think anybody who's ever been involved in any kind of bad MLM type of thing, especially in the insurance industry, like it's a thing that I wholeheartedly recommend, even if it didn't end up being great television. The first several episodes are very worth watching. Yeah,
it's good.
Yeah. So that's where we are. I feel like this was not a fun or lighthearted or lots of laughs episode that we've done. You know, coming off the last one,
but I think it's a really good episode from the people should know that if you're being told to recruit from day one, run.
Bad news, man.
Run. Like, get away from that place. Now, let's throw a little, let's stir the pot a little bit.
Okay.
You're a brand new agent.
Yeah.
Nick. You watch this video.
Mm-hmm.
You're like, okay, noted. And you start making, and you watch, and you listen to what we're saying, you start making $15,000, $20,000 a month, just being an average, good final expense agent, doing what you're supposed to do. And all of your friends are like, hey, I want to come work with you. Should you take them on as agents?
I wouldn't. I mean, you can. If you know them. Here's the reality, though, guys. Most people should not be in insurance sales. Almost everybody should not be in insurance sales. And of the people who belong in insurance sales, most of them should not be selling final expense insurance. It's a specialized type of insurance for a specialized type of salesperson.
Yes.
Most of your friends and family who think that this is a great thing for you to be doing will end up really, really not liking this. Really not liking this.
Yeah. Chances are, if you're watching this, you probably don't like this very often.
Well, yeah.
You know? So, like, I'll say this. I posted about the roll-up debt in Insurance Soup, right? Which, as you know, is comprised mostly
PNC.
Of PNC people. And they could not wrap their mind around how $17,000 was rolled to me. They're like, wait, you're taking cash? And they were like, wait, do you not have a bill of, like, all these weird, I was like, what are y'all even talking about? Like, how does this not make sense? I had a bad agent, he wrote a bad business, and I was like, wait, like, I'm forgetting, most of these people are PNC. They don't deal with this type of stuff. It's a final expense is a totally different world.
It's not how most insurance works. And it a little bit in mortgage protection, it works like this, and a little bit in other places. I mean, somebody had posted on one of the other, I don't even remember which group, it might have been TTC. Somebody posted like, hey, you know, do you guys not have wholesalers to help you like place your business?
I just saw that guy from Florida. Like, come on, dude.
Well, but the thing is, like, no, for final expense, no, nobody in final expense knows what a wholesaler is or what they do. One of the moderators actually asked, what is a wholesaler? Because wholesalers are really important if you sell annuities. Wholesalers are really important if you sell large life insurance policies. I've worked with wholesalers when I've been doing some of my large life insurance stuff, when I've been doing some of my annuity sales. Yes, I have a wholesaler that I talk to, and I go and I do my first appointment and I do my fact find and I say, oh, this is an annuity client, and I get all their information. I send all their information to my wholesaler, and my wholesaler says, well, based on their information, you should probably be writing them with this company. And I go, thanks, buddy. And I go back and I sell them that company on the second appointment. And that's not what final expense is.
You don't
It's
need that.
No, well, you don't want that. But it's but a wholesaler in most life insurance is your upline in final expense. Upline's an MLM term. Like the fact that we're calling them an upline, that's borrowed from multi-level marketing. The fact that we're calling them downline, that's borrowed from multi-level marketing. I don't like it. It's shorthand that we use because that's used on Facebook and the internet all the time. But I mean, like, I don't ever feel comfortable calling it upline and downline.
I hate calling, people in my hierarchy my downline.
I know, it's awful.
It almost feels like I own.
Yeah.
You know what I mean? Like I hate when I am talking to an agency and they say my downline and my downline, this is my downline. And I'm like, whoa, you don't speak for your agents.
Yeah. You
don't. All of my downline are coming with me. No, they're not.
Yeah.
They may.
Right. They might. But yeah, I always feel icky about it, and I don't like it. But it's the shorthand that gets used in the section of the internet that we live on that talks about insurance and stuff right now. So I don't like it, but it makes it easier to use the same language. But I mean, that's MLM stuff. Like that's all straight from like network marketing speak.
Did you know that Amway, a very known IMO in North Carolina near Greensboro, rhymes with, I can't think of anything, Sandy Farsight,
Okay.
actually is from Amway.
Yes.
Is from Amway and realized the opportunity that he had in insurance. He was like, wait a second, I can sell these pink cards that are called leads for a lot of money, and I could be at the top.
So the next time we have John Duggar on,
hopefully soon,
which we're working on getting schedules together. He's going to be back on soon. We should have him talk about how he got into the insurance industry, because and if we haven't already, maybe we did in one.
Maybe we did. I don't know.
But maybe you've heard that story elsewhere. But that's how he. I mean, that's how he got involved in the insurance industry in the first place. But we'll talk about that down the road.
Yeah.
But yeah, so that's kind of where it is. Like, this has kind of been a backdoor into like runaway from multi-level marketing scheme stuff. I don't know that that's what we intended it to be, but
well, it's
sort of
how
goes the direction it goes.
It's just how a lot of roll-up debt happens.
Yeah.
It's the side of the business that people don't talk about, and we should.
Yeah, we should. And the other thing is, like, it's better for you if you don't live off of advances like your whole life. Like, if you're able to get down to a smaller level of advance, like, here's the thing. I see agencies right now talking about 100% advances, and that scares the crap out of me. 100% advance is terrifying. Like, for everybody, just from like a financial structure, like getting that extra 25% of commission advanced to you is a somewhat terrifying prospect, because that is a larger amount of money that you are on the hook for. If you can survive on a 6-month advance, you should be taking a 6-month advance. I don't know many agents who can survive without an advance at all, without having been in the industry for a long time. But if you can go as earned, if you can be a 3-month advance, if you can be a 6-month advance, a lot of these insurance companies charge you interest on your advances. The more you know. If you're contracted with several of them, check your contracts. They charge you interest on your advances. You make less money when you're advanced. So it's a loan. Every time you get an advance, it's a loan. It's not your money.
Yeah, if I could go back and do it all again, I would somehow figure out a way to survive 6 months without any advances without like just kind of have this rolling amount of as earned business that by month 6 becomes a very livable wage, and then it just snowballs to a much larger and more livable wage. That if I were to have a roll up debt like this, it almost would just 1 month I would not get paid, maybe, you know. If I go back, that's how I do it, but I'm not there. So it's the same, it's almost the same money. You're just surviving long enough to see the fruitfulness of as earned. So if you can figure out a way to go from 9 and take it down to 6, and then take it down to 3, and then take it down to 0, or as earned.
Hey, listen, the best time to do it, if you get a commission bump, when you get bumped your commission, drop your advance. You know, almost everybody will let you take a 6-month advance instead of a 9-month advance. Absolutely. Some companies will let you do a 3-month and some won't, but everybody will let you do a 6-month instead of a 9. And you're better off. I mean, you're better off on a 6-month advance if you can afford it.
Absolutely, especially if you're becoming a manager.
Yes. Oh God, yes.
Especially.
Yeah, stability. That's the same time that having a Medicare book of business makes sense for you also, because like anyway, just getting off in the weeds, and we'll be talking about this for another 2 hours. But
yeah. Well, we'll talk about it on a different day. But I know I want to have JD back on.
Yeah, absolutely.
John Duggar. And I want to have, and I guess we can talk about this now. Dusty back on.
Sure.
I look back at the comments, and there's still people on that video where he was talking that still.
Yeah.
Some are hate, but some are love. Yeah.
It was an impactful video. The crazy thing to me is, since we did that video, Dusty has 1,000,000% changed the way he does business. He's not doing anything like what we talked about anymore. He was already moving away from it when we made that video, but he's not doing nothing.
Yeah,
like that
because
anymore.
at the time that he works with me at where I work, and at the time I told him, like, Dusty, the reason you haven't grown in the 17 years that you've been doing this is because you're door knocking. Like, it works for you, but you can't duplicate
Nobody wants
that.
to do that. Nobody wants to
do it. Nobody. And so I was like, call, and he's actually really good at calling too. He's like,
of course he is.
He's a natural salesperson, right? But
of course he's good.
Yeah. So it'll actually be good to have him on, because we'll talk about how much different, things have changed since then. And is it still viable what he's, what we talked about then? It'll be good to have him on. And then, is there anybody else that's on your wish list that, we would want to talk to?
Well, yeah. So I want to have, I don't know. I don't want to name names if we aren't sure we're going to be able to get them on. But the gentleman that we were talking to, who you've known for a little while, who does mostly door knocking instead of calling and setting appointments.
Oh yeah, Damon. So I'm going to say his name.
Because I don't know if we can say his name, because it hasn't been like scheduled.
It is. He's not like scheduled.
Is it? Oh,
yeah.
Okay.
We talk. It's whatever.
All right. Making sure. Okay.
Damon Dillard is coming on. He's coming on.
All right.
If you don't know who that is, do some research. Damon's awesome. He actually has a pretty large scale agency. Damon's like, I reached out to him when I was first getting in the business. Actually, it was like 6 months, 8 months of the business. I reached out to him, and he helped me out tremendously. We didn't work in the same agency, worked in the same company, not the same agency. And I learned who he was. He learned who I was. And then years later, we walked into a room together. He was like, Matt. I was like, Damon, what's up, dude? And it was like we never, we hadn't talked in a long time, but it was good. Damon's awesome. It's it's going to be a door knocking video.
Yeah.
Just so you know.
Door knocking leads, not cold calling.
Yes.
But yeah. But I'm very excited about that, because I've been wanting to get somebody back on who actually does that and is good at it. And we have been having difficulty. Not that we haven't been able to find people who do it, but we haven't been able to find people who do that who also want to come on the show. So we had a couple of people lined up who we just could never get the schedule right. But I'm looking forward to doing that one. That'll be a good one.
You know who I want to have on a video again?
Who do you want to have on the video?
Chris Smith. It's been too long.
Oh, it's probably about time we brought Chris back on too. We need to find something.
A couple videos with Chris.
Yeah. probably.
He's just good banter.
He is.
Um,
Chris is always a good time.
He's always a good time, and he's always willing to push the needle.
Well, and he owes me a couple of beers at this point. So if baseball ever comes back into if baseball is ever allowing live studio audiences again, we'll
do that.
Go to a baseball. We'll do a live baseball game, and he's gonna buy the beer.
Who else? Who else? Let us know in the comments. Who else have you seen that you want to bring back on? Maybe Justin. Maybe Dave Duford again. Maybe Justin.
I think it's almost about time to bring Justin Turner back on. Just talk about it.
Justin Thomas.
Oh gosh, goodness gracious! I'm sorry, I was thinking about baseball. It's time to bring Justin Thomas back on, and talk about what he's doing with his new lead system too.
Yeah, no, it's awesome
because he's revamped his whole thing, and
it's good. Yeah, let us know who else you'd want to talk about, and have you ever experienced Rollup debt? Anybody in this? And if you have not experienced it, have you learned anything from today's video? I hope you have, because it is not lighthearted as our normal videos are. I hope this video resonates with somebody somewhere, and it saves you from $17,459 worth of Rollup debt.
Yeah.
So, Nick,
good times.
Yeah, always fun talking to you.
Absolutely.
We got one planned next week, so you'll see this video next week. If you haven't, the new video dropped last night. You should go watch that video, because it's that good of a video.
Yeah, it is. It's got a terrible description. I wrote the description. I couldn't remember what the heck the video was about, because it was right before Matt got sick, and then stuff was happening, and I could not remember what the heck we talked about. And then I watched it back after I wrote the description. I was like, oh shoot, this description does not do this thing justice.
No. But it's good.
It's a great video.
It's good. It's a great video. Go watch it. Well, we'll talk soon, guys. Thanks again.
See you later.